we move forward, TradeNet's intro package is currently on sale for 30% off, and that's a pretty big sale. And so if you're interested in taking advantage of that and using the same broker that Mitch and I use with no PDT rule, I'll include a link in this video's description. Also, go check out PL Aerial. They supplied me with my footage in the beginning of this video, and so if you're interested in some really nice drone footage, I'll include that link in the description as well. And so thanks for watching and enjoy this video. So today's class is on all-day faders. Everybody should be able to see it, I think. And so all-day faders, what I really want to say is that this is more of a continuation pattern. When I start going over this, there's two different types of all-day faders, right? Two different types that I can see in the market happen on a consistent basis. The more popular one is probably gap fills, overextension breakdowns. I see those happen a lot, and that's kind of my strategy with shorting in general, is looking for overextended stocks and shorting them. And then there's also downtrending stocks. Now, with both of these, you're really going to use two different types of conditions for both of these. Gap fill overextension breakdowns, you're going to look for overextended gap ups, even maybe overextended daily charts for your shorts. And then for the downtrending stocks, you're more going to use the daily chart to find a stock that is trending down and trying to take advantage of that with a longer term trade, if that makes sense. And so the first one we're really going to go over is the gap fills extension faders. These breakdowns are extremely common in trading. With these, you find a gapping stock and look for it to fill the entire gap on the downside. But like I said, this is more of a continuation pattern. And so the way you really want to approach all-day faders, gap fills, extensions, it's stuff like that, is you want to just trade your strategies, but you want to leave a little bit of sizing to ride it down for that fade. And there's some other type of strategies to approach these faders that we'll go over a little bit later via on demand. But the first thing you want to understand is that you can either trade this like a swing trade, a longer, like a day swing trade where you're holding your day trade almost all day if you're super confident in it. And we'll go over where to set stop losses and stuff like that. But with gap fill extensions specifically for gap fills, stocks that are overextended gapping up and then fade the next day, you want to use your pre-market support and resistance as the key levels in that trade. Why? Because the stock is gapping up. And so those levels are going to be in play. They're going to be the most recent levels a lot of traders are looking at, which is the pre-market levels. And you're going to be able to have a little bit of a guide with those pre-market levels, trading these. As always, with both of these faders, you want to be really careful around the previous closing price. That is where you should really start thinking about covering, at least in my opinion, because, like this says, it's a gap fill. So it gaps up, it fills the gap. And a lot of the time, it's going to bounce, at least once around that previous closing price. Because at that point, the entire gap is filled. And now, I'm not saying it's always going to stop there and it's never going to continue. But a lot of times, it's going to come back down, fill the gap, maybe rebound some. And like I said, sometimes it's going to end up breaking down under the previous day's closing price as well. And so we can look at a few examples here. You can see the extended gap up on the upside. So this was NIO from a few days ago, but you can see the extended gap up on the upside here. Okay, this is what you want to look for. My kind of rule of thumb is I look for anything that's really gapping up over 10%. Specifically if it's gapping up 10, 20, 30%, it's a little bit better just because it's a little bit more extended. But anything over 10% gap up is sufficient for me when I'm looking for an all-day fader like this. Another thing you want to see with these is that, let me pull out my annotation here. Another thing you want to see for these is the big key levels for when you're looking to trade these all-day faders is that you just get in with your typical short strategy. So for instance, if I shorted the stock, I guess I can get a pointer here. It might be a little bit better. If I shorted the stock here at this pullback to the VWAP, and I cover a partial at the previous low of the day here, I can look for this support to finally break. Once it breaks this support here, you can see this major support, that's when I'm going to look for that area to hold as resistance. If I get confirmation in that, that lets me know that this might turn into an all-day fader. Another way you can think about it like this. you can, if you're shorting the stock here, you can set this area as your risk for the most part. Of course, you don't want to be super strict with it. You can maybe let it test a little bit higher, but for a good rule of thumb is that you can set this area as your risk. So if the stock comes down here, you can let it test these levels. And, if it stays under these levels for the most part, then you can continue holding that trade, trying to write it down for the big breakdown. Another area you can see, when it bounces up here, it uses that area as resistance, the major support. So you wait for the support to form and then break down. And like this says here, one of Mitch and I's favorite ways to approach these all-day faders is we get in with our typical VWAP fade. We get into our typical VWAP fade. Let me erase some of this just so it's a little bit more clear. Okay, so we get in with our typical VWAP fade. Say we short the stock here. And we let it ride down. We take a partial at the low. Once it really starts breaking under this, Mitch and I's heads are going to light up, and we're going to say this could be an all-day fader. We're just going to let this stock work. And we're going to set the previous pre-market levels as our risk. And if you look at the chart, the pre-market levels are definitely in play. So you can see if I draw this line out and just go straight across, it runs right into this. And so these levels are here to guide you in pre-market. And that's one of the biggest things I want people to understand. People always ask me how I calculate risk reward. How do I know where my stop is and stuff like that. A lot of times when you're trading and shorting, specifically these overextended gap ups, your pre-market levels are going to guide the trade, because those are the levels that everybody else is watching. Again, let me see if I can draw a line on this. Let me see. For sure. So look, I'm just drawing out the pre-market support, right? You could just draw these lines across and see how much the stock's following these lines. Does everybody see how well pre-market can guide you in these trades? Look at this. Resistance here, support here. Support here, resistance here. Support here, resistance all right here, and support previously. So you want to let pre-market levels guide you in the trade. And so when you're trading all-day faders, these levels are going to be your stops. These levels are going to be your risk in that trade. Does that make sense? For instance, say I have these drawn out on a chart, and I finally see it break under that support here. I can say, okay, well, I'm going to hold on to this trade unless it breaks. I'm going to stay in this trade unless it breaks this level here. Then it breaks under this support here. I could say, okay, unless it holds over this level, I'm going to stay in the trade. Another way Mitch and I like to approach these trades is that, as you can see here, you can also add your sizing back or short again on the pops to the resistance. This is another way we handle VWAP fades, is that say you get into this trade with 1,000 shares, right? You get in right here at the fade with 1,000 shares. You sell your 500 here, take profits. You let it drop here to this support, you sell another 400. Or you sell another 200. At this point, you're holding that little 300 left, that little 300 shares left, and you could really let this trade work. You can let it work, and you can tell yourself, okay, I'm going to hold these last shares until the stock breaks over this level. If it doesn't break over that level, I'm going to keep holding it and look to get a much bigger move all day position. Now, you can also, like I said, if the stock bounces up to that resistance and you want to add more risk since the trade is going your way and you have a super defined resistance area, you can add more risk here. Say you're holding that 300 shares and the trade's working really nice for you, and then it bounces up to this resistance. It's all subjective. You can do whatever you want in the trade, but a lot of times I'd prefer to just add my risk back. Say I'm holding 300 now, I can add another 200 up here, get a little bit better average, and anticipate this breakdown move. So does that make sense? I guess what I'm really trying to show is that pre-market levels guide this type of trade. These fades happen so much in the market where a stock will completely fill the entire gap and just reverse. And you can take advantage of most, if not all, of the move by just following the pre-market levels, using those to guide your trade, and using those to analyze your risk and reward in that trade. Does that make sense, everybody? Okay, so yeah, just before I erase all this, I just want to make sure everybody can kind of see what I'm going for here, see what I'm really talking about with these type of trades, is that you can ride these shorts down. You're going to trade it just like your typical short strategy. With me, it's the VWAP fade. Even if you don't like the fade and you just like getting in bear flags, Regardless, you can let the stock attempt to fade all day. You can let the stock work and add on bounces to your resistance levels that you've drawn out from pre-market. You can add your sizing back and anticipate the stock to stay bearish. Or you could set these levels as your risk. If the stock breaks this level, I can get out of the trade, and take my winning trade. All right, so the next one I really want to go over is the downtrending faders. And these happen a ton in the market as well. The downtrends happen with different sectors, with different stocks. And the big thing is you want to use the daily chart to determine these downtrending stocks. Like this says, it uses the daily chart to determine stocks that have been trending down by looking for confirmation via either rejections at resistances, 2 or more down days in a row, and so forth and so on. And again, just like the gap up fader, you really want to be careful around the previous closing price. But we can go over examples for a downtrending gap up fader as well. So this is a daily chart. I believe this is on NBEV. And so I think I've gone over this one before. But you can look and see this stock is downtrending. You can see the downtrending stock. Does everybody understand why it looks like a downtrending stock? Because you have it's like a flag pattern. You have a down, pullback, down, pullback, down, pullback. And so does everybody recognize that? I want to make sure people understand that, because that's really how you're going to identify these downtrending stocks. Is you have downward move, pull back up, downward move, pull back up, downward move. And so you could see here the downtrend started on this specific day. It was really confirmed on that following day, because that's 2 green days or 2 red days in a row, because you could see big downward trend, pull back, downward trend. And so it was really confirmed here. And the fader that I'm going to go over is this day here, because you could see this downtrend move here. You can see it trending down. Okay, so this is on that specific day that I drew previously. And you can see support formed here. It broke underneath that support. And then again, guys, what happened? It held as resistance here. This isn't the prettiest VWAP fade here, but it was sufficient enough to show an all-day fader on a downward trending stock. And we'll go over some more examples in a second. But this is the level that I'd be watching. So say you get in short. Sorry, I'm trying to navigate through using these areas. Say you get in short on this fade here. You can set your risk here, your reward maybe here. Just to give you an example, maybe here for that pre-market level. At this point, when it finally breaks under this low right here, you could take your first partial here, and then you can let the rest work. And you can tell yourself, every time it bounces off support here, you can take profits. If it bounces back, as long as it holds under this big support level from pre-market and from intraday, you can be pretty safe in that trade. You can let it continue to work. And when it bounces back to the VWAP, again, at this resistance, after the support was formed, you can either do 3 things. You can add your sizing back if you're already in short from this area, using the previous support as your risk, which would be this area here. You can hold the position until it breaks this previous support here, or the new resistance, or you can just enter your trade in this area as well with the tight risk of that previous support. Really, I don't mind entering the trade here, because if you think about it, this is your risk. Your risk is, you enter here, your risk is here. Super tight risk. Your risk is only this much, but your reward would be down here. So this much. So big risk, or big reward, small risk. Really what you want to look for in a trade. And then you could just let the rest work. You can hold on to it. Some people like adding on the little bounces as long as it holds under the big support level, or maybe your break-even price here, and they just can ride it out. And the following day, it ended up dropping as well, because it was in a downward trending daily chart. And so I guess what I'm trying to get across is that gap up all-day faders, showing you how to approach them, and more importantly, with gap ups, you want to use pre-market to guide you in that trade. With trades like this, where it's a trending fader, you want to use the intraday chart, the previous support and resistance from that day, and also the daily chart. The daily chart's really going to come into play as well. And so you'll see these happen a lot. Like if I pull up the chart, that's it. The PowerPoint was short for today because we're going to be going over some examples. But I guess what I'm trying to get across is that these faders happen a lot. And with gap ups, you're always going to use the daily or the pre-market levels to guide you in that trade, especially if it's a big gap up, because those are the levels that are the most in play. And so I'm going to go over an on-demand example showing you kind of how you can approach these, how you can add on bounces and stuff like that. But does anybody have any other questions before we move on to that?
Yeah, you see, guys, you can always add once you get that first amount of profit. A lot of traders call this house money. And once you get really good at trading, I really don't recommend this. Maybe if you're paper trading and you want to just get used to it already. But one of the key things in this is learning how to kind of make some money at the beginning and then use that money to then put that at risk in the trade by adding the size and then taking that big swing. We only recommend this when you get that first really big move. You want to be kind of up in the trade so big that you're at a point that even taking a fourth of your size, if you took that payment for the day, you would be okay with that
Right.
because that's essentially what you're accepting. Once you accept the risk that you're willing to take now, that you're willing to risk, let's say if it was a $300 trade, you're going to take off, 50, $60 of this, and now you're going to really put on the burners in the trade. There's nothing wrong with that as long as you accept the risk, take some off so that you can pay yourself if it doesn't go your way, and take a swing. As long as the daily charts match up, the trading plan's there, where the daily lows are, like John's bringing up. It's very important. Even on the long side, if you know where the daily highs are, I actually sold really, really high up on Yelko. Not only did I buy really low, but I sold really high. And why did I do that? Because I used the daily chart, and that's how you capitalize on a stock trade. Use all the multi time frames to find out where the important levels are, and you capitalize in that area. Because if
Right.
you capitalize in that area, you really maximize all the stuff that we preach about, and that's risk and reward. Because once you get in on the key resistance or support level, you just have really, really small amount side on risk side and a whole range on the reward side.
Right.
And then it's just a matter of determining what your accuracy level is going to be so that you can have a winning consistent trader. That's the only way you get consistent is then to get that determined. All right, well, 3-1 works for me, or 2-1 works for me. There's some traders that 1-1 can work for you, but you just have to be really, really accurate.
Right, for sure. And here's another good point to bring across is that sometimes people ask me why I want to see so much volume in pre-market. The reason is pretty obvious. Does anybody know why? I mean, there's a few different reasons, obviously. Volume helps fulfill the patterns, but there's another reason I really like seeing volume in gapping stocks and not just plain gapping stocks. Does anybody know? Can anybody guess? True. But one of the big reasons I like to see volume in pre-market when I see a gapping stock is because it gives me super obvious risk and reward levels because it gives me super obvious pre-market support and resistance. If the stock has no volume in pre-market and the stock is just gapping up, I don't have anything to guide me in that trade. I don't have anything to see where the levels are in pre-market and after hours. I have nothing to guide me really from. I can use the daily chart, that can guide me, but it just is much better in my opinion when the stock is actually moving, flagging in pre-market, moving a lot because it presents you with those support and resistance levels that guide you in the trade. You can follow those pre-market support and resistance levels just like you saw with this example here. you can use these pre-market levels to guide you in this trade. You can make them your risk, you can make them your reward, you can make them your adding levels like this here. And so I love seeing a stock gap up with good volume because it gives me those support and resistance levels to follow. That's my guide in the trade. It makes my trade so much easier to plan because I can use those pre-market levels to guide me. If the volume's not there and it's just kind of gapping up with no volume and not moving, I don't really have a guide in that trade. You know, I can use daily charts. I can use the daily charts and map out the support and resistance that way, but it's much easier for me to just look at the pre-market levels and use that as my guide because that's what all the other traders are watching. And so does that make sense? All right, so we're going to go over a few examples. Mitch was also talking about the daily chart here. And look at CRON. This is a good example of a downtrending stock. You know, this daily chart is beautiful to me as a short trader. You know, because you can just see how well it is following this little daily pattern that it's presenting. You know, you can just see how pretty these little flags are. Pull back, down drop. You know, pull up, downward trend. And you get lots of confirmation in it, especially in this area here. Here as well. You know, look at all these down days in a row. Just a beautiful downtrending stock. And this is when you're going to get a lot of faders. Here's a good example. So you can see CZR here had a lot of volume in after hours, and it formed this support here. And this is a trade I actually made money on. And it had resistance here. You can see I can draw this resistance line here. And I can use this area to just guide me in the trade because you can see support here and here. So you get confirmation 3 times in that support. And then what does this stock do all day? Here it is. What does the stock do literally all day that day? Bounced off of that pre-market support level. Literally over and over and over again. You know, and so in trades like this, you know, if you wanted to, you can literally add back some size on every little bounce here. It's just been confirming it so much. I mean, the odds are in your favor. You know, every time it bounces to the VWAP, you could just add your sizing back. You know, this thing faded off the VWAP. Man, this is probably one of the best examples of just a continuous VWAP fade over and over and over again. Let's see, 1, 2, 3, 4, 5. 5 times in this day did it pull back to the VWAP and then got rejected back down. But the point is that I can use these pre-market levels to really guide me in the trade. And so, for instance, say I get in right here at this little VWAP rejection right here. Let me give a little bit easier way to see it. Say I got in short right here. And, you know, I'm holding a short position. I'm running it for this breakdown. Where's going to be my logical area to take profits? I can use pre-market and after hours levels to guide me in that trade. I can say, okay, well, this was major support in after hours. I'm going to take my first profit right around this level here. Why? Because it was support in after hours and pre-market, you know? And so you can use, even if you want to go a little bit more in depth with it, I can use this support in pre-market as well and resistance. Yeah, even if you want to use this support level here, again, it pulls back to that level, which was also the VWAP, and then gets rejected back down. You can see all the support it had here. And so you can use the levels to guide you in the trade. Let me see if I can find another example. Yeah, I remember this one. All right, so I can jump in short. Yeah, look at that spread, man. Now, I took 500 shares just because I think it's a good example. Let's fast forward a little bit. You know, these can be your first reward targets. I don't know about 13. It's a little bit too close here relative to the risk, but this 1275 level definitely looks good. All right, so here, this is where I want to take my first profit. I can take my first profit at that low, and then I can let the rest work. Does anybody have an idea of where my second profit target would be? Down here, at the actual maximum low of the day, down here. It's all subjective. So this is actually the level I was thinking, but reward targets are all subjective. You could also take them at $12.50 here, you know, for the $0.50. And so it just depends on how you want to approach the trade, your risk tolerance, and so forth and so on.
All right. So let's say we took some, you know, we've seen the stock already come down to the bottom, kind of work its way back. And now it's going to work its way to that resistance. Yep. Right there. That's the beauty.
All right. Let me get the line up. So remember, you can use previous levels to guide you in the trade when you're trying to trade these all-day faders. So you can give that level there, and you can just watch it. All right, so we get another bounce to the VWAP. I may have missed it. Hold on. But just for sake, I can add the sizing right back and get back in with my full sizing because I've already banked a lot of profits here, you know, and so I can add my risk back. And I can also use the previous levels as my risk at this point. You know, I can use this level as my risk. If it doesn't break that previous support and resistance here, I can be comfortable in the trade. You know, if it does break that, I can get out, and it's still a green trade. It's still a big green trade and still a big winner. But if it still holds this area as my resistance, I can just let the rest of the trade work.
One of the key things is what's your average now? So what did your average change to?
1250.
Yep. And you see how high above you are?
Yep.
You have more than enough to use that risk line right there that you're going to still get out of this trade green, but you're going to get yourself an ability to make another home run on this trade.
Right.
So now where you guys are going to take profits, where would we be taking profits on this next move? The low of the day, exactly. You want to attack that low of the day.
Right around 1250s.
If that's what you're taking that trade, you know, a little bit. I would use that first down line.
That's what I like, actually.
Because those are other ones those are kind of more extremes. You get multiple touches on this one.
And this is confirmed it here, 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 and here. It's confirmed it multiple times and here. And so that's going to be a more solid reward target.
And what do you guys see? It just start working its way right back down, guys. Just rejects from that level, works its way right back down, starts gaining, always little bounces, but you don't worry about that. You just know your target.
Right.
You just know that no matter what, you're going to win on this trade.
Right.
And you see how big of a reward you're starting to really open up on this trade. And the only thing we've really taken is one 500 size position and another 500 size position.
Right. And that's pretty small for the gain that we would have in this trade thus far.
Exactly.
So it goes right back down to the low of the day. And it's like I went over in a different class, is that a lot of the time the stock is going to do this. Like you can use that CZR chart as an example, that the low of the day is a super obvious reward target for shorts. Why? Because even if the stock reverses, a lot of times it's at least going to test that low of the day. Even if it doesn't break it, even if it doesn't wash out and give you that bigger gain, a lot of the times it's at least going to test that previous low.